Hi everyone, I'm Chad Shoop, the editor of Automatic Profits Alert, and today I want to talk about what everybody else in the world is talking about, and that's the panic that we saw in the market on Monday, February 5th. Now, if you worked in the investment world, then I'm sure you got a call from either a friend or family member who's saying, what the heck is going on? You know, the market's just nosedived out of nowhere. Nobody's really expecting it. Nobody's really calling for it. But it came and it caught everybody by off guard. And as you're watching it in real time, you're just seeing the Dow just roll over in the last hour or so of trading, and it was tough to watch. I mean, and I understand why we get all those calls and everybody's concerned and worried, like, hey, is it going to keep falling further? Is it time to get out? What do we do now? And I think the vast majority of investors were saying, just stay the course. This is a correction. It's a well overdue correction. If you go back to 2017, that had the smallest pullback of any year since 1994. So you have to go back all the way to 1994, and they dipped 3% in 1994. It dipped 3% in 2017, but that's the very, very small pullback. So already in 2018, we've surpassed that, and you know, this is just the first. You know, we're only a month into the year, but I think we're going to see more corrections as we go forward. And even though I think we're going to see more corrections and we're going to see more volatility, I still think these are great buying opportunities, and that's because in general this market should still move upwards. And you're going to be able to buy on the dips and ride it higher, and then you're going to go through another correction and then be able to buy more on the dips. But eventually it's going to break out higher. Now, you know, I'm predicting this, but I am basing it on some source, right? It's if you go back to my January 1st article for Winning Investor Daily, I wrote that for this year, the one thing that you can expect is to see market panics. And I mean, I was right, but I didn't know I'd be right that quick. So I knew that we would see some market panics this year. I just didn't know exactly when. And we've already got one, and like I said, I expect to see a couple more. But I was able to make that prediction based on a 100-year-old calendar that covers the 18.5-year market cycle. And it was calling for market panics and low prices in 2017 and 2018. Now, we didn't get anything in 2017. Like I said, it was pretty much a straight run higher. So that's how I knew that we were going to see market panics in 2018. And that's also why I think that we're going to see low prices in 2018, but ultimately it's calling for euphoric, extremely high prices in 2019 and 2020. So this tells me that this is just a short-term correction. We're going to go through a couple probably this year, but then it's eventually going to break out higher. And that's why you want to be able to buy on these dips. That way you can benefit when the market continues to run higher. And just for everybody wondering, based on that same cycle that called the market panics this year, the 18.5-year cycle, we're not expected to see a bear market until 2020, 2021, or even 2022. So we have some time to still invest and, you know, to stay leveraged in the market and not panic, not, you know, pull all of our money to the side when we go through an 8% correction or even a 10% correction. That way you're able to use this opportunity to buy back into the market and go through this one more rally at least before we go into a possible bear market. Well, that's all for my video today. If you enjoyed it, be sure to subscribe to our page and continue following us. Until next time, I'm Chad Shoop with Automatic Profits Alert.